There we go. Good morning, everybody. Today is Thursday, March 9th. Hopefully, y'all are having a great Thursday morning. We just had the jobless claims coming out this morning. Came in 211,000 people on the initial jobless claims versus 195,000 expected. So a surprise of 211 over 195, about 8.2%, and this is about 10% higher than it was the week prior. And if we go over to the economic calendar to check this out, the continuing jobless claims also came in significantly higher than expectations at 1.718 million versus 1.659 million. And this is the highest continuing jobless claims, or the total amount of people that are unemployed, that we have seen since last year on December 29th. If we look at the yearly chart, this came in at 1718, and the last time that we saw 1718 was right here on December 29th. So highest reading that we've seen in a while, so we could be starting to see some layoffs in the economy. We did hear one of the Congress members talking about the historical data and how bringing down inflation by 2% means that there will be about 3.5% people unemployed. So getting inflation down by 4% from 6% right now to 2% is their goal, would require the unemployment rate to go above 10% when it's currently at 3.5%. This is usually what you'll see right before a recession, as you will see record low unemployment, and then that is followed by rising unemployment, and then the recession to come with that. Good morning, Peter. Good morning, Nice Fishman. Good morning, Ben. Hello, LK. Good morning, KKX. Good morning, Irfan. Don't understand how this is bad for currencies and good for stocks. Doesn't the Fed want more unemployment as increasing rates? So this basically means that the rate hikes that they've been doing have been effective enough to lay off some people, which is going to bring down inflation. So that means that they don't have to raise rates as much as anticipated. But if you look at the FOMC watch tool, this is still estimating a 75% chance for 50 basis points at the March meeting on March 22nd. But if we go out further to say July, this may have changed. Actually, it hasn't by much. It's still sitting at 550 to 575 for the peak funds rate. But the odds for going to 575 to 6 actually dropped by about 5% from 36% yesterday to 32% after this report. So that's why you're getting a little bit of a upward reaction for the stock market, as that peak rate could be going down because, again, the Fed's rate hikes have been effective in laying some people off, which decreases inflation. Yes, exactly, Gary. Perfectly said. So if we go over to SPY, currently trading at $399.80, so very close to that 400 mark. My guess, we might come back to $399 and then probably rally, but QQQ is currently trading at $298.40. IWM is actually in the negative, interesting enough, but the 10-year treasury rate is actually still hanging up at 3.97. This morning it was above 4, but it couldn't hold those highs. Interesting. And then the dollar index is playing with that monthly high at 105.35.9. Currently it is at 105.33.1. So that's going to be kind of the pivot point, I feel like, between either bullish or bearish for the dollar index. So we'll see if we can crack that. If we go above higher, then stocks will come down. But if we can't crack that, and if the dollar goes down, then stocks would go up. But right now, we're just kind of in the middle and undecided here. any large news today, not besides the initial jobless claims. That was the big news for today. I don't know if there's any more Fed members. I don't think there's any more data coming out. We do have Fed Barr coming out and speaking in about 27 minutes. So that could sway the markets in one direction or the other, depending on if they give any forward guidance on 50 basis points, 25 basis points. I feel like 50 basis points is already in the bag. So if they come in saying 25, that would decrease the odds, which would probably end up in the markets going up. And I think Fed Barr is a neutral member, if I remember right. Fed cheat sheet. This will tell you who's a dove, who's a hawk. So who's in favor of 50 basis points, 25 basis points, or higher rates, lower rates. And Fed Barr lands, let's see, actually slightly on the hawkish side right here. Fourth least hawkish. And then you have Powell right below that. So, not really getting much action out of the dollar or SPY so far this morning. 9:33, so we're about 3 minutes into the market, and SPY is up by 0.2% after the higher than I expected initial jobless claims. I think it could be a decent opportunity to open a put credit spread, assuming we'll stay above maybe 398. I would want that one expiring today, which my zero data expiration options don't usually end up performing too hot. So that's what kind of worries me. I'll probably just put down less risk than I usually would. And that could help mitigate any losses. But if we're assuming that it'll be above 398 today, we're getting paid only $16 in credit right now. So that's not the best risk reward ratio. If you're putting down $200 of risk, you're getting paid a whopping, let's see, $250 in risk, you get paid $50, which, I mean, that's okay, but it's not ideal with that risk reward ratio. And then the put debit spreads that I opened for SPY are currently down by 20%. Assuming that SPY is going to go down to 393, I think that could happen, but it's going to take tomorrow's report coming in with the, the non-farm employment change or something like that. Let's see, tomorrow, the non-farm payrolls. So that's a big report coming out tomorrow morning, and then you have government payrolls, and then, of course, the unemployment rate. That's probably the biggest report coming out tomorrow morning. So if that continues to come in lower and lower, or if it comes in the same, that is, record low unemployment, which means that the Fed needs to continue to raise rates in order to, lay people off to get rid of inflation. And that's coming out at 8:30 in the morning. Good morning, Brett. Has anyone done coaching call with me? Would I recommend it? Well, not sure if anybody here has done it. We've only had a few people in the Discord that have. I know a couple members. I think Lon is his name. No. I'll have to find that. Oh, Y-O-N. Yon. Yeah, so if you message him, he might give you some idea. Yon0016, and I will link the free Discord. Biden raising capital gains tax? Yes. So he's raising the capital gains tax supposedly for millionaires, billionaires, from 20% at the highest tax rate to 40% for long-term capital gains. So basically, he's moving long-term capital gains to the short-term capital gains tax rates, essentially. And then he's actually raising that. I think it was 36% or 35%, and now he's moving that to 40%. Let me see. Biden capital gains tax. Let me read the exact verbiage he's calling for. Proposed 25% minimum tax on U.S. billionaires, from 20% to 39.6% for capital gains. It doesn't say what tax bracket he's doing that for, but I'm assuming that it's the highest income tax bracket. And then he's proposing a billionaire minimum income tax to ensure households worth more than $100 million. That's not even $1 billion. That's kind of stupid to call it a billionaire minimum income tax, but pay at least 20% in taxes, pay your fair share, tax the rich, blah, blah, blah. I think it's a bunch of bullshit to hand your money over to the government who's just going to spend it all in fucking Ukraine or whatever they want to spend it on. They don't spend it on the American people. They'd rather send the money overseas, but it is what it is. That's America for you. And then you got QQQ trading at $2.99, so that's one's almost at the 300 mark that I'm looking for. You have that $299.23 resistance that it's currently at, and then SPY trading at $400.30. So it looks like we're definitely getting the bounce this morning. And with the only news coming out being the jobless claims, unless Fed Bar ends up switching up at 10 a.m., I think we're probably just going to be bullish. So that 398, 397 put credit spread is looking pretty tasty right now. All right, they're paying 15 cents. I think I'd be willing to take it as long as Fed Bar doesn't say anything crazy. That ought to be okay to assume that SPY is going to stay above 398 today. We might be able to get it a little bit lower since we're trading at 440 cents. All right. Getting 16 cents at the bid now. It's a little bit more credit. All right. Now we might be pulling back to 400. The bid is still 15. All right. I'll take it. I'll take it at 15. And I would say if we slip below 399, I might want to get out of this trade. And if the dollar index makes its way back up to that resistance level now at $105.35.9, I'd probably want to get out of this trade. But for right now, it looks like a decent opportunity. New options alert. This is a day trade. Just opened a new SPY put credit spread expiring today, which is the 9th. I can't type. At 15 apiece, assuming SPY is going to be above 398. So yeah, as long as that dollar keeps getting rejected at that $105, 105.35.9 level, SPY should be going up today. they trade inverse with each other. But we are right at that 400 mark, so I probably could have got a little bit more credit out of the put credit spread. But yeah, these are going for 19 cents credit each instead of the 15 that I got. Blows, but okay. TQQQ puts. I never trade leverage ETFs with options. Too spooky for me. What do you think about doing the wheel for airline stocks? Let's see. Not a huge fan of the wheel in general, but let's see. United Airlines. Jesus Christ. How's the stock at a 52-week high? That's wild. They really rallied ahead of their earnings report and then continued afterward. That's pretty crazy. And then let's look at Delta. They were profitable the last few quarters, it looks like. So they're finally turning around on profitability. I'm just wondering how much debt they have after the pandemic and taking out all the government debt that they did back in 2020 to keep their business afloat. I would be a little bit worried about that, especially with the cost of debt going up. Let's see. Go to United Airlines, investor relations. Fourth quarter and full year results. Let's see. 9.1% pre-tax margin ahead of schedule in Q4. So their operating income came out to, let's see, doesn't have a dollar number, just percentages. Net income of $843 million. Adjusted net income of $811. Capacity was down 9% compared to the fourth quarter 2019. That's not much of a change since pre-COVID, interesting enough. Total operating revenue, $12.4 million. Let's see the numbers in the spreadsheet. That's my favorite way to view. So looking at total operating revenue coming in at $12.4 billion for 2022 compared to $10.8 billion in 2019. So they've actually increased their revenue from 2019. That's not really too much of a surprise, though, given that, you know, inflation is up and how that ends up, you know, affecting ticket prices. It's not really surprising to see them making an extra, let's see, 12,400 over 10,900, an extra like 14%. And even with their number of their capacity down, that means they drop capacity by 9%, so you would add that to the 13%. So really, you're seeing like 20% inflation for these ticket prices on airlines. So that definitely, you know, pads their margins, and their net income came in at $843 million versus $641 million. So they're definitely getting a lot more on the bottom line with this inflation spout. And let's see. Next thing I would probably want to look at is their amount of cash and debt. If I can find that financial information, non-GAAP. Not looking for that. Capital expenditures, net cash provided by operating activities came in $2.5 billion for, I'm assuming this is this year. Oh, that's a 3 months ended. Okay. And then net cash from operating activities for The full year was actually $6 billion. So they're making a ton of cash from the business. That's good. And then you want to see either how much they're spending on debt, or if you can find the debt balance itself, that's ideal. But I would imagine that they have a very high debt balance compared to their cash, just because they've been losing money over the last couple of years since COVID, and they took on a lot of debt because of COVID in the beginning. But looking at their cash balance, it looks like, if I can find it, this is their balance sheet, so this will tell you how much debt they have. Total assets, $67 billion. Current liabilities, only $20 billion, and then total liabilities, $67 billion. So they have about, well, 3 times as much assets as short-term liabilities. And let's see, then their cash flow statement, they had $18 billion in 2021, but they only have $7 billion in 2022. That's not great. They're burning through money even with their business making cash. That is a bit troubling. $7 billion, but if the business is making $6 billion a year, they should be able to add to the cash, but somehow they managed to lose like 12. I'm assuming a lot of that's probably going to come from spending on debt. Yeah, investing activities is where that came from. So they ended up paying off $11 billion of debt this year. Jesus Christ. So if they have to keep, paying off that much debt a year, then they're not going to have any cash left over. So that is a pretty sticky place to be in for airlines. Their cash or their debt balance is just too damn high. And with the cost of debt going up, it's only going to make things worse. So personally, I wouldn't run the wheel strategy for airlines, but it could work for some people. Any way to roll iron condors for Robinhood, you would have to just manually do it. So close out of the old order and then open the new one. What delta do I usually use for my spreads? I don't usually use a delta value. I mostly look at percentages. So usually SPY hasn't been moving more than about 0.5% to 0.75% in a day, just because volatility is so low. So what I'll do is I will take, that 0.5% move is about $2 for SPY. And if I don't think that SPY is going to come down more than, 0.5% from where it's at right now, then I would move my strike price $2 down. So I took the 400 level, subtracted 0.5%, and that gave me the 398 put credit spread that I got for SPY this morning. And that one is currently up by 20, or about 40% so far. And if we're looking at the dollar index, that one's still coming down. So this trade is, likely to work out unless things turn around for the dollar. And then the 10 years at 3.96. If anything, this would probably weigh down the market just because it's in that high 3.9 level. But with the dollar coming down, algorithmically, SPY is going to go up. And then QQQ is currently trading at $300.50. That one slightly above my call credit spread strike price that I chose, that I assumed it would be below. So that's probably taken some gains away from me this morning. Gold is actually doing pretty well. Not too shocking. Whenever dollar goes down, gold will go up. So this one's gaining me $100 today. Still down by 260. I think gold would probably need to go to like 175 for this to be profitable. And it's just been kind of chilling in that like 167, 172 range, if I remember right. Let's check out GLD. Yeah, so it ended up bouncing at 168-ish, and it failed to go above 173. So if the dollar keeps going down, that means that gold is going to rise, and then the opposite, if the dollar goes up, gold will come down. So that's basically what we've been seeing, is just kind of teeter-tottering around with the dollar going up and down. Let's check out. IWM is managing to be positive this morning. IWM is usually a leader, so if we do see IWM coming down, that means that the markets are going risk off, which isn't too surprising given that rates are as high as they are, with a 10-year at 3.96 and the 2-year above 5. I could see the markets coming down, and I do still have some bearish positions for QQQ and SPY that are expiring for Friday for QQQ, and next week for SPY. I'll probably just continue to hold those. But IWM is just having a real tough time. Looks like crossing above 187, which is like the bottom end of the range that it was in last week. I think that there's a decent possibility that it just holds the range that it was holding last week, which would be above 186. Maybe you call it 185 to be safe. But it does seem like the markets want to go risk off right now, with IWM lagging behind all the rest of the indices. Let's check out the watch tool again, see where the odds of 50 basis points is. I think it's probably just going to be unchanged. Yeah, it's 78%. So even with the initial jobless claims coming in higher than expected, more people unemployed, it didn't really change anything for the 50 basis point situation. Yeah, there's a lot of open interest at that 404,000 mark. That's actually where the maximum pain point is for next week's expiration. So if we look at maximumpain.com/options/SPY, expiring next Friday is the third Friday of the month, which is the monthly option. That is the 17th. The maximum pain point is 400. So that means the highest open interest for call options and put options is at the $400 level. So what happens here is that the market makers will try to push towards that $400 level towards the expiration. That way, most of the options expire worthless. So we could get, just kind of trading flat for, the next week, assuming that we're going to be at that max pain point. We might see a lot of fluctuation up and down around that 400 level. Bitcoin does the same, similar to commodities, yeah. Sold TWM for 68 profit today. Still good. Any profits is good profits, in my opinion. What's my prediction for SPY today? It's currently up at the moment. My assumption is that it's probably going to stay up or trade flat, just because of the unemployment report coming out this morning. That's the main news, unless Fed Chair Barr comes out and speaks more hawkish than expected. That would change the sentiment to bearish. And I do have trades going in both directions. That's probably one of the most important things that you can do for your options account, is leverage in both directions, right? So I have this SPY put credit spread, assuming that SPY is going to hold up today, But then I have a QQQ call credit spread, assuming that QQQ is going to go below 300 tomorrow. So I'm leveraged in both ways. That way I can take advantage of the markets either way that they go. And then I also have some larger positions in Bank of America with a Leaps put option. That one's, Jesus Christ. Bank of America's down to 31. It's down by 9% this month. That's pretty rough. Let's see. A bull with a lot of money has decided to take a bullish stance for Bank of America. I mean, with the 10% drop that it's seen over the last month compared to the rest of the market, mean reversion would probably be in their benefit. Yeah, the speech is at 10 a.m., so in a couple more minutes. What was my trade this morning? The put credit spread, assuming SPY above 398 was a trade that I made this morning. What makes SPY hit 411 by tomorrow? I'm pretty doubtful that SPY would go all the way to 411 unless, we get a shocking employment report tomorrow where we see like 3.3% unemployment rate was the last reading. If we see like 3.5, 3.6, that would be a shock, and that would probably send the markets up because more people are getting laid off. There's higher unemployment, which is what the Fed wants in order to cool inflation. So that means that rates could come down, which would send SPY up. But so far this week, with all the employment data that's been coming out, it's been kind of just mixed. It's been neutral for the most part. World War III would make it go to 400 in this market. Yeah. Any bad news is good news. I think the expected range, I want to say it's 40. Actually, I don't know. What is the expected range for this week? I didn't do my weekly analysis because I was in the process of moving, but we started at 406 for the week, and let's see, the expected move is $5, no, $2 by tomorrow. So we might be going to like 408, but I'd say the likelihood of that is still pretty low, even at 408. Unless, again, we get that super high unemployment rate at like 3.5, 3.6. That could probably send us above the 408 level, but odds of it are very low. My guess is if we do get a higher rating, it's going to be just slightly higher at like 3.4 versus 3.3 previously. So Barr should be speaking now, so we'll see if we can find a link to their speech, maybe. Kind of doubtful that we will, but we can always try. Fed speech calendar for March. Today is the 9th. Oh, we do have a link to it. Peterson Institute for International Economics in Washington, D.C. Good old Washington. Oh, they're talking about crypto. That's probably not going to be too relevant. We'll see if we can pull it up, though. Why do y'all need my information? Virtual event registration. I'll just listen to the news on it or follow the news on here instead. I don't think it's probably going to have much effect on the markets. If anything, it might have some effect on crypto, but yeah, probably not going to affect the markets too much. Probably not. Hi, Julio. Good morning. All right, let's check in on the put credit spread for SPY. Keep watch on the dollar. Currently trading at 105.27, so that is catching a little bit of a bounce at 105.18. If that does manage again above that 105.36 level, basically you would want to probably get out of any bullish positions for SPY. So I'll create an alert for if we go above it. Currently sitting right below. RSI for Dixie is below 50, so that's bearish, which means bullish for SPY at the moment. Oh, that tea was cold. All right. Tesla's managing its way back up, currently at 183. Still down 8% this month after the investor day. Didn't live up to expectations, so it's below that 200 mark, up 0.8% today. A lot of people talking about how Elon handled that situation with Twitter and laying off one of his employees with, what was it? MD, muscular dystrophy. I thought it was kind of raunchy to handle that over Twitter and not like in person or through a Zoom call or anything. But, you know, it's Elon being Elon, so how come I'm not big on the wheel strategy? It uses up a lot of cash, and I would rather save my cash. I've got, $18,000 of cash saved up in this account, or $17,000 of cash saved up in this account, and I would rather keep that. Keep that and spend it on the dips. Well, not really, buying the dip, but rather dollar cost averaging into couple stock names that I like Fulgent. Today is Thursday, so it is dollar cost average day for me. I'll buy 100 of each for Fulgent. It's 3 shares. I still need 40 shares in order to get to the 200 mark that I want. Maybe I can focus more on Fulgent since Tesla's trading at 180. It's still relatively high in my opinion, so I'd rather buy Fulgent. So $200 worth. And then after that, I'll start selling cover calls on 100 shares instead of the 200 that I want to own. That's the goal. So let me post that to the Discord. Nope. God dang it. There we go. Buy alerts. Just bought 200 worth of Fulgent. And then the other stock that I've been dollar cost averaging in for another account on Fidelity has been QQQX. It's a covered call ETF that pays you 8% a year. So for every 100 you invest, you get $8 back for 1 year. And then if you divide that by 12, that would be 66 cents back per month. So far, I think I've got 2,000 or so invested in it. Let's see. We've got 82 shares, and it's trading at 23. Yeah, roughly 2,000, 1,800. And I'll buy $200 worth of this. 200. And post that to the trade alerts too. That's not the right link. There we go. Just bought 200 of QQQX. Alrighty. TQQQ puts. I wouldn't trade them, but let's see. They might just lose value today based on time decay, if anything, but let's see. SPY ended up topping at that 401.44 mark. The dollar is still headed down, so it's probably going to be a fake out to the downside. We might manage our way back down to 400, but as long as the dollar keeps holding down, then I don't think that I'm going to see much upside or much downside for SPY. Let's see. FedBar says banks are expected to notify the government before engaging in cryptocurrency transactions, says banks may face crypto risk. Crypto technology has potential transformative effects, but requires appropriate guardrails. That's the whole point of crypto, is to get rid of the guardrails set by the government, but okay. Says that new financial technologies have the potential to accelerate payment systems. Absolutely, our payment systems are slow as hell. Banks are expected to notify the Fed before engaging with crypto. The Fed would consider it risky for banks to directly own crypto assets. Huh. So that might not be a good take for Bitcoin. And then FedBar says recent experience shows that crypto could pose risk to banks, though exposure has been limited thus far. So not really anything about the markets, just talking about crypto this morning. So probably not going to impact SPY by much. Calls on Greg. Do I do my charting by looking for zones or Fibonacci? No, I just do it. I'll look at the daily chart for the 1 year time frame, and then I'll either try to identify gaps in the market, like this gap right here, take the top of it, and that would be a new resistance level at 417.23, or I'll look at like this gap right here. Bottom of it was 401.44. And then I'll look at what are known as candles of significance, if I have any on here. Looks like I only have gaps here. This would be a candle of significance, though. So a larger candle than the usual. You take the open price, the closing price divided by 2, and this one ended up being at 406. This one was actually pretty close, interesting enough, at 401.44 for this candle of significance. But that's basically the only price levels that I use, is gaps and candles of significance. And then the trend line that you see is the mother of all trend lines, coming from the top of the bull market, trending down ever since. And then sometimes I'll add Fibonacci's. If I add a Fibonacci, it'll be like a significant period of time, like from the COVID lows to the bull market highs. So 218.26 was the bottom. Add the drawing and the Fibonacci retracements all the way up to 479.98 at the top of the bull market. And the next Fibonacci levels from that would come out to either $418.21 or $380, depending on if we're bullish or bearish, obviously. Yeah, no problem. What are some of my favorite stocks to trade? I would say SPY, obviously, just because I do a lot of macro analysis. I mostly trade around earnings reports, which, I mean, it's a different one each week, right? Usually 2-3 earnings reports each week. So for this week, I would be trading, there's a couple that are reporting today after hours, if I remember correctly. Ulta is one of my favorite to trade on earnings. And then, let's see. I made a shit ton of money on Ulta last quarter, assuming that they would go to new all-time highs, and they did. This quarter, I'm not so certain on that, though. I think that Wall Street has their expectations set a little bit too high. So I think that Ulta could actually miss. But let's see. There's another DocuSign. DocuSign, I have like a hit or miss relationship with them, so probably won't trade them. But Ulta, this one's basically trading at all-time highs at 532. The assumption is that their earnings is going to come in better than it did last quarter, which is possible given, the holiday season, more people shopping. But we had a pretty slow shopping or holiday season. So I think that this could actually be a possible miss. And Wall Street has their expectations set really high for their revenue. I wrote this down yesterday in the premium Discord. If I can find it, hopefully. So IVP is relatively low at 40 compared to the last year. IV is kind of low across the board recently, so not really too surprised to see it down at 40. That is actually relatively high compared to a lot of other earnings reports that were coming in at like 10 or 20. But Ulta coming in at 40 means that IVP is somewhat high, but not super high compared to where it's been. And then, well, that's supposed to say Wall Street, not Wall Street trade. Wall swing trade. But Wall Street expects 557 earnings per share, 301 billion in revenue versus a earnings per share of 534 for last quarter. So they're expecting 20 cents higher than last quarter. And a year ago they were doing 541 earnings. So they could possibly do that given, the inflation that we're experiencing. And given that they are somewhat profitable at 540 earnings per share, but they are trading at $530. So this means that they're trading at a 23 price to earnings ratio, which for Ulta, I'm not sure if that's really sustainable. So for me, I would probably take the short trade. For Ulta, probably just assume that it won't go to new all-time highs, which would be 540. And for earnings trades, I never usually risk more than like $200 just because, it's binary. It could go either way. You can always be wrong. So I think I'll take that trade now since it's trading pretty high and the markets are up today. Let's check Ulta. It's trading at 530 right now. If we assume that it's going to be below 540, I would probably set my expiration date to next week. Usually on Thursday earnings, I like to extend it a week out just so you have a little bit more time for the stock to move, whichever way you choose. But assuming that it's going to be below 540 this week, or next week, sorry. Wait a minute, that's not right. Oh, the bid-ask spread is so bad. Oh my god. Oh, Robinhood, why do you gotta do this to me? Okay, I gotta do it on Aries to get a decent bid-ask spread. Ulta. I don't want to favorite it, but okay. But next week's expiration, assuming it's going to be below 540. Oh, the SPY put credit spreads are starting to lose a little bit of value. SPY's pulling back a little bit right now, but let's try to take advantage of the Ulta trade, paying us 80 cents at the bid, 90 cents at the bid. So you're risking 140 to make 90, which is an okay trade. Let's see. The problem is that each one is $160. That's what I hate about stocks that are so expensive like Ulta. Makes it harder to trade them and get a decent credit. If you go wider on the strike price, 540, 545. Let's replace this with the 545 strike price. You get paid 190 credits to risk 300. That one I'd be okay with, actually. And I might be able to get a little bit more, but we'll see. 1.9. I actually got 198. Cool. So I'm assuming that Ulta is going to be below 540 next week with this one. New options alert. This will be a swing trade, assuming earnings is going to come in bad tonight. Just opened a new Ulta call credit spread that's expiring next week, which is the 17th of March. And I got him at 198 actually, instead of the 190 that Aries was quoting me for. And the strike prices, I'm assuming it's going to be below 240. All right. So there's my new position for today. SPY's pulling back below 400 right now. The dollar index is still hanging low, so I think probably a fake out here, but let me check. Robinhood. Currently still up by 200 this morning. A lot of it coming from gold. And then from the Bank of America puts, Jesus Christ, Bank of America is just getting slaughtered, down 2.5% today. How much of the QQQX do I own? Let me check. Fidelity. What's my Ulta trade? Call credit spread, assuming under 540. So I sold the 540 strike price, bought the 545. I ended up getting paid $198 of credit. 393 possible for SPY today? Doubt it, but anything's possible. Kathy Wood's buying a ton of Tesla lately. I mean, she's just, trying to balance her portfolio. Whenever Tesla goes down, she buys more. Whenever Tesla goes up, she sells. It's just kind of managing her portfolio and trying to keep that Tesla position around 10% or something, I think is her goal usually. So she just kind of manages that whenever the stock goes up or down. I wouldn't say that's bullish or bearish, just, doing whatever she needs to do to get it to that 10%. Good morning, joining late, buying stocks. How long are we holding? Going to scalp. I just been buying stocks each week, like $200 a piece for Fulgen and for QQQX, just dollar cost averaging, just because I have a lot of cash on hand. Can I show people the page where the market makers want to keep SPY around 400? Yeah, that is right here. So maximumpain.com/options/SPY, which I will link right here, and it's 400 for the 17th this month. And then somebody asked how much QQQX that I own, so let me go over to my Fidelity investments. I really wish they had an actual two-factor authentication and not text messages, but 793, 996. Remember my device, please. All right. QQQX, I own. Should be close to 200 or 100 shares of it. 90.7 shares. So basically 91 shares, I'll call it. All right, SPY's managing back to 400, so not really moving much in either direction today. Glad that I chose 398 instead of 399. I was kind of tempted to go higher and get that higher credit, but that would be getting pretty testy right now. And I'd say as long as the dollar index doesn't go above that 104,359, or sorry, 105,359 level, I'll probably just stay in that SPY position for today. Possibly worried about Dixie going above 50 RSI though, so we might be cutting our position if it does that. Let's see how this goes. I'd rather cut the loss at $15 than possibly lose like 200. Yeah, 255. So keep an eye on the dollar. If it goes above 50, I might just end up cutting this position short. And this is why I usually don't trade zero data expiration options. Usually not in my best interest. But still got the bearish positions for QQQ and SPY, so those ought to be doing okay. And then let me add Ulta to the earnings. That one's down to 528 from 533 at the high. So that one's pulling back finally. I would think if SPY goes negative somehow today, Ulta would probably follow along with it. Given that it's at all-time highs, that would put probably more pressure on Ulta to go down versus SPY. Mom and I think y'all could replace Jim Cramer. Trying to make safe money selling puts. Could you recommend a good put option for coin or maybe some other stock? I would say the decent and safe stocks for right now, considering high inflation and considering the possibility of a recession and probably 9 to 18 months, or 6 to 18 months, I would probably want to put my money into companies that have leverage in order to continue to raise their prices. Coca-Cola would be a pretty decent opportunity, in my opinion. Walmart would be an okay opportunity just because it is a staple. People aren't going to stop going to Walmart because we're in a recession. And then I would also consider like AT&T, because people aren't going to cancel their phone plans in a recession, right? People want to be connected. So AT&T would be a pretty decent option, and that's probably the cheapest option that you'll find with it trading at $18. Coin, on the other hand, I do think that they run a lot of risk. Just being a high growth name and interest rates going up, usually those have an inverse correlation with one another. So if interest rates keep going up, coin would end up coming down some more. So SCHD, I haven't heard of that one. SCHD, Schwab Dividend Equity. Yeah, dividend stocks are okay. Verizon. This one's got a lot of Verizon in it. Broadcom. So Verizon would be another good pick too. VZ. People are going to cancel their Verizon just because we're in a recession. People still want to be, talking to other people on the internet. I don't think that it's going to go away. So Verizon, AT&T would be good ones. What other? Again, Walmart, Coca-Cola. Let's see what else. McDonald's. Although McDonald's is getting too damn expensive. Like $2.69 for a McChicken. It makes me just want to go to Wendy's instead. But McDonald's is also like a $265 stock, so you need $27,000 to sell put options on it anyway, so that counts me out of the equation. Yeah, Starlink could take away some, but Starlink is mostly for people in rural areas and outside of the city, so that's not really going to take away from the people that are already living in the city that have Verizon and stuff, and it's not really made for that. What do I think about EV companies for the future? I think that EVs have a bright future. I think that Tesla would probably be the best just because they've been in the game for longer than everybody else. The Ultra Trade has a wrong strike price. Let me see. They've been in the game longer than anybody else. They've been mass manufacturing since 2012, whereas everybody else came online in like 2019, 2020. So they're late to the game, which means that they have a lot to catch up on. So Tesla would be the best opportunity for EVs. Whether that's overvalued or not, it's kind of hard to say. Oh, sorry, 545. Yeah. There we go. Nope, 545.45. Thank you for the correction there. Any idea what constitute a wash sales with iron condors? That I couldn't tell you. The wording is very vague. The options have to be similar enough. So I don't know if you could do like a later expiration date, if that would be similar enough, maybe. That's really hard to say, though. Don't do my own taxes, so don't really worry about that myself. Will it be at risk of assignment for Ulta due to earnings today? Or am I planning to close before the market open? No. Or market close? No. I am planning to hold that one into expiration unless I realize a lot of the profit today. Did I sell my SPY puts? Let me check. See if I should. Dollar ended up pulling back some more. 105.22. So it doesn't look like we went above 50 for RSI. So I'm probably just going to keep holding this. Best stock options to trade with under 2,000. Since you're under 2,000, you don't have a margin account, so you can't do spread options, which makes it a lot harder. But you could do like cheaper companies that would bring down the cost of your options, like Verizon, AT&T, buying puts, calls on those. Anything under like $50, what you could do is go to finviz.com, go to their stock screener, and change this up to, I would do anything more than a large cap company, just so it has enough trading volume behind it. Then you want to look for a stock under probably $50 would be suitable if you have less than 2,000. So you're looking at like American Airlines. Let's see what else. No other stocks that I know of on this page, but let's see if I can copy and paste this link. Hopefully it gives you everything. But yeah, stocks under 50 would probably be suitable enough. And then you want to look for large cap companies. That way there's enough trading volume behind it to get in and out of your trades relatively quick. Want to confirm there's no risk of assignment. There is always risk of assignment if the stock goes super deep in the money. But you can always mitigate that risk by exercising the opposite option. So say Ulta ends up going to something crazy like $600 tomorrow after the earnings report. We would likely get assigned on the 540 strike price that we sold. But then we could exercise the 545 that we bought, which would mean that we would buy 100 shares at the 545, sell them at the 540, and take the max loss. It's not really much of a risk. The only risk would be that you can't open any other options for the rest of the day. Yeah, no problem, Joseph. What's the difference between regular calls and puts and spread options like I do? It has a defined risk and reward, whereas buying regular puts, buying regular calls, you can make as much money as you can imagine. Like, say I bought a Ulta call and Ulta goes up by 20% tomorrow after the earnings report, from 528 right now to, let's see, 1.2 would be 633. So it goes up 20% tomorrow to $633. If I ended up buying one of the options on here, expiring for March 10th, say I buy the $535 call for $1,280, my break even would be $535 plus $1,280. Let me take this number too. Minus 535 plus 12.8. So my break even would be 547.80, which means that I could potentially make, $8,500 for this option. Whereas if I just went, say, with a 535 call debit spread, instead, that's the same assumption. I'm assuming that Ulta is going to go above 535. But for that one, I'm paying a difference of $1,270 minus $1,500 or $270, and since the difference between my strike prices would be $535 minus $530, that's $5 difference, and I can only make the difference between that, the $5 difference, and the $230 difference between the the $270 that you're paying for it. So I could only make $230, whereas the other one, if it went up a shit ton, 20% again, I can make $8,000. So that's the difference, is that limited reward depending on how high the stock goes or how low it goes. Is the jobs report coming out tomorrow? Yes, we have the non-farm payrolls coming out tomorrow, and then we have the unemployment rate coming out tomorrow. If that comes in higher than expectations at like 3.5, 3.6, that would be bullish for the market, but I think it's probably going to come in 3.4 or below. I think if it comes in at 3.4, it'll be neutral. And then if it comes in at 3.3 or below, that's probably going to be bearish for the market because, again, that's another record unemployment number, record unemployment rate, record low unemployment rate. And the Fed wants people to get laid off to reduce inflation. So that's working against their incentive. At the money or out of the money with weekly options or monthly options? I mean, I choose my strike prices based on where I assume the stock is going to be. So there's a multitude of ways to do that. I mostly do it based on my the price levels that I have and how bearish or bullish I am for the stock. So for SPY, I'm assuming that it's going to be very bearish next week after the inflation report. So I chose, I think, the lowest price level on here. Actually, it's lower than that, which is 393. When the lowest point that we've had over the last couple of weeks was 392. So my assumption is that we're probably going to go to new lows after the CPI report next week, but I could be totally wrong, which is why I don't risk a lot of money on these kind of options. I think I risked like 200 for it. So what happens if I got a sign for Ulta? I would take max loss like 300, not 50,000. Yes, exactly. So with the Ulta trade that I opened, say if Ulta goes to 600 tomorrow, the person that bought the $540 strike price is probably going to exercise that to buy the 100 shares at 540. Then I would exercise the 545 calls after that. Right. So I would buy the 100 shares at my 545 strike price that I bought, and then sell the 100 shares at the 540 strike price that I sold. I don't need the cash since I have a margin account. Robinhood or whatever broker you're using is going to take care of that for you. You're not going to owe $54,000 or whatever it would be. All right, these put credit spreads currently going for $18 a profit. Just going to keep on holding these again until we see either a break above 50 RSI for the dollar index on the 2-day chart, since this is a daily expiration date. That's what I'm looking for. Or if we go above 105.36, I probably want to get out of this trade. But for right now, just going to keep on holding it, and yeah, that's all the trades I got for today. Do you have to call them or anything? No. All you have to do is just, with Robinhood, what you would do is they have like an exercise button on here for the option that you bought, and sometimes the broker is just going to do it for you. Most of the time they'll do it for you, but if you do have to do it manually, basically what you would do, go to the 545 that you bought, click this exercise this option button, and then that would finish the deal for you. No, you wouldn't want to close it. You want to exercise it, not close it. If you close it, then you will owe $50,000. But yeah, that's all the trades that I got for y'all today. And I will catch y'all tomorrow at 9:30. See you, everybody.